Okay, guys, good morning to all of you. Can you hear me loud and clear? If yes, give me a thumbs up or put an L and C. It stands for loud and clear. Now, of course, do me a little favor to consider to share this MAO right now with more of your friends because today's MAO will cover very intensive stuff, which includes what happened in 2008 and what's happening right now. There seemed to be an incredible relationship, or can I say repeated patterns that have been falling through. Okay, so you need to hear this live from me. So quickly now, like and share this this MAO right now. Now do note once again, our MAO will be moved to YouTube. Now there is a technical reason for that because of we realized that recently Facebook has a little bit very questionable way of how they operate. Okay, and the way they do certain things is right. I just cannot understand. So because of that, right, I felt that in the near term we may see some issues there. So that's the reason why we decided to move away from Facebook, and we also moving to YouTube to continue our MAO. Now the MAO structure for this coming September, it will be short videos, let's say less than 15 minutes, so that you guys can watch it as and when you want. And also, most important, you don't need to have a Facebook account, okay? And you can also realize, it's supposed to be shorter, right? So you won't be bogged down with all my my 1 hour plus over talking. So this is what I feel that, okay? And of course, to watch it this right, just go to our Trade with the Boys YouTube channel, and then you can actually watch it, okay? So in case you guys don't know where is it right now, right? Let me just bring to you live now. Give me a moment. Let me just bring to you live right now. Okay, just give me a moment. Okay, a moment here. Let me just go live right now to that part there. Okay, there we go. Okay, all right. So let me read you the YouTube channel. Okay, there we go. Okay, so this is our YouTube channel. Just go to go to YouTube and key Trade with the Boys. We have about 494 subscribers, and then just basically like it. Okay, once you like it and follow, you will get all the YouTube notification right to you itself, and you can actually watch the daily MAO. But this only start in September. Okay, so we still got one more MAO to go on Facebook. That will be on the 31st of this August. Okay. All right, so you can see all our past videos are all there. All the past MAOs are all uploaded there itself. You can see over here. Okay, so if you missed our past MAOs and you want to trace back what I say, is all here. Now you understand why itself we will rather you guys to come here, because we can post all this thing and it's quite well what they call fragmented. Okay, all right, you can see there's so many videos that we have done over the years. Okay, so you can see that we are probably one of the very, very consistent trainers in the market who have been updating you guys with market calls and market outlook for the longest of period of time. You can see that. Now, we don't have much views here because almost of y'all have you watch it on Facebook. All right, so that's why we're going to bring you guys over this side. Now, is it for monetization? Well, it will be a bit of monetization. That's a little bit. But the more important thing is that at least this is where you can see the whole structure here. So you can see that we've been there and been doing videos for the longest of time. Now, for those who are very new to us, all right, welcome to us. You can see that I'm still showing you the past videos that we have actually done over the years. And kudos to Susan, because she's the one who will do all the editing and uploading to this YouTube channel. Thank you, Susan, once again for all the great work. All right, so you can see the videos are still ongoing. You can see that's how many videos we have. All the way from the last time we have this event with Arun itself, right, whereby our talk show is all up there itself, okay? So it's still going on. You can see I'm still trying to go to the bottom of this entire fleet of videos, and it's still ongoing right now. And you can see that there's some demographic changes along the way, whereby from last time only words and stuff, then with more pictures and stuff, right? And of course, we have our brother Yao Tong, okay, coming in to stand in for us and stuff like that. You can see all the past videos are all there. and our past testimonials are also there. So if you guys want to watch all this video, you can go back to this YouTube channel, subscribe to it, and you can watch everything over there itself. So it's still, I'm still moving on and still loads and loads to go. Okay, guys. Okay, it's gonna be, if I couldn't do this, it could be taking another 5 more minutes. Okay. Anyway, these are all the videos that are available, and we're telling you this is all right. We are the most consistent with our day-to-day market wrap. Okay. All right. Just basically go to Trade the Boys and like and follow us over there. So, okay, done. Okay, next thing is, guys, good morning to you once again. Today is 29th of August, Monday. All right. Told you that Jerome Powell will be hawkish. I already told you guys at the very beginning of the MAO on last week, we were very, very clear on my view on how I see what Jerome Powell will say. All right. I think someone is asking me to turn on the lights. I think. Hold on a minute. Yeah. Hold on. Okay, don't think it changed a little bit too much, anything here. Okay, anyway, all right. The point is this: Jerome Powell was hawkish. Okay, and for the 8 minutes alone, right, he wiped out more than billions of dollars off the market. Okay, in fact, the tabulated figures was more than $500 billion was wiped out. Okay, all right. So the thing is this: are we going to see a repeat of 2008? Now, why 2008 and not 1974, not 1987, why not 1999 or 2003? Now, there's a rational reason, and I'll share with you through the charts of the S&P 500, and then that's where we have to think whether or not are we going to see the same thing happening. All right. So, one minute. Let me just do myself a favor. I've got to share with more people. 1 minute. There we go. Now, someone asked me this question. So what time will the YouTube channel be out? No, it'll be out in the afternoon. I repeat, it will only be out in the afternoon. Why? Because we will be watching the market live at the same time to see the direction of the day. So from there itself, right, you get to see the market review, and also you can also see the stock market, the market itself live. So like that itself, right, you can use the data to trade for a living. Okay, that's the reason why we are shifting certain things around, because we really want to, really do what we say. We really want you guys to make money from the market. Okay, and because I'm no longer going to give training, so that means that all these things stands that we only want you guys to make money from the market. Okay, all right, and it has no bias on it, and want you to push you guys to become a student of ours. Okay, all right, so that's the whole idea of that. And of course, we're going to introduce our crazy app, and that is whereby only students of ours can get the crazy app. Yep. So all these things is going to come online, and more information coming out along the way. Okay. All right. Cool. Okay. So I'll tell you more how I see about this 2008 very, very shortly. But before that, so let me thank Ames again for the great work. Thanks, Ames, for all the sponsorship all this time, and thank you for being such a great broker. We really appreciate that. Thank you very much once again. Now, remember, last week I asked you about Humpty Dumpty, all right? And I asked you that what happened to Humpty Dumpty? And of course, if you remember, the thing is that he had a great fall. Yes, he had a great fall. Exactly. Yes. So I'm not too sure how many of you caught that word FALL, the F word, but yes, and we saw the stock market down by 1,000 points on Friday. So think about this, guys. Was there any insinuation itself? I think probably there is. And of course, the stock market have created, oh my goodness, a shock and a heart attack for many, many traders. So the thing is this, think about this, guys. This is what people realize that, right? People realize that when Cal speaks something itself and you keep on repeating it and highlighting it, right, there's going to be a chance of things might be happening. So what is today's joke of the day? Today's joke of the day is this: China, Europe, the US. We are all in the same boat. Now, what boat is that? Is that going to be a China boat or a cruise? No, it's a big ship, and this ship is known to be the Titanic. All right, in 1914 itself, something really happened. Unfortunately, 1912, when the Titanic went down. All right. So the thing is this, the question is, how come? What happened? Well, if you know history, 1914 is where Federal Reserve actually got itself established. Interesting. There's a very interesting fairy tale that happened then itself, right before Federal Reserve was being created. All right, something actually happened during the period of time, and there is a mystical conspiracy over there. But of course, this will leave it to another time when we have it a YouTube channel whereby I can do a lot more sharing without being banned. Okay, all right. So that is the main reason why. Okay, so of course you can remember this by what I shared during the MAO. All right. Now, during MAO itself, right on the 26th of August, I asked you guys how many of you are expecting this Jerome Powell to be hawkish or dovish, remember? And of course, many of you were actually pretty clear and objectively says that Jerome Powell will be dovish. Okay, dovish means that they expect the monetary policy by Jerome Powell and friends to be easier. All right, so many of you were looking at dovishness, okay? And I was very specific. I told you from the very beginning. I'm not too sure whether you remember it. I said I repeat myself one more time. I repeat myself. I think and I believe that he will be hawkish today. He will be hawkish today. And that was what I said during the MAO, where about at least 400 of you guys were watching it. And you guys heard me very clearly. I was saying that the market will be hawkish. Remember that? Yep, indeed. So if you remember that, or if you recall, then of course that I was saying that, and of course being hawkish means that the market will likely take some profit. And unfortunately, the market really did that 1,000-point drop on the very day itself. All right, so I'm a decent chartist, right? Okay, if you think that I am a decent chartist, put the word spot on for me, Ken. Put a spot on, Cal. Let's do that. Do me a favor, right? This is my second last MAO. So on Facebook. So do me a favor, if you think that I've been doing a pretty decent job, well, not fantastic, not excellent, not godlike level, just a decent job, put the word Cal spot on or put on Cal. That will be good enough for me. Okay. Thank you very much, guys. That is the least I can ask for from you guys. And I really thank you guys for all your support on this Facebook for the longest of time. Now, we are not being removed by Facebook. It's just that I foresee something might be happening on Facebook soon. That's why I think that it's a good time to move on. As you know, guys, I've been supporting Facebook for quite some time, but I also tell you guys that I'm not very comfortable with what Facebook is going in terms of direction. And that's why I've been pretty bearish on this counter, actually. So I think if you are fast enough, you probably understand where am I driving at right now. Yeah, where am I driving at? Okay. Thank you, guys. Thank you. Thank you again. Once again, we have, wow, so many of you. Thank you. Chong Ming, thank you very much. Louis, thank you. Hao Young, thank you. Susan, thank you. Eddie, thank you. Richard, thank you. Eugenio, thank you. Brian, Vincent, Jerry, Aiden, and Judy. Thank you very much, guys. Thank you for all the support all this while. All right, let's continue then. All right, so that's why on Friday, Jerome Powell came in and really tell the whole world that they will use our tools forcefully. Now, remember, back then in QE, he was saying that he will use his tools to effectively stimulate the economy, and we had the Dow Jones rampage up from 28,000 all the way to 35,000, all right, 7,000 points upon that statement. So now the same statement is used in another different way. They're saying that now they'll use the tool forcefully and attack inflation. Now, we must understand the mathematics here itself, guys. You must understand the mathematics. Now, current inflation is at 8.5%, right? This is the inflation data. Okay. The current interest rate right now, the Fed fund rate, okay, the interest rate itself is now at this 2.75%. Okay, get it? Okay. So the thing is this, if they really want to bring down inflation back to 2%, then mathematically speaking, the interest rate right now has to go beyond the current inflation figure. So we can see that from 8.5% where we are right now versus 2.75 is a whole 6% difference. And the midway, let's say we do a midway of this, is at least 5%. So the problem is this: if the market itself is reacting with 2.75%, then you can imagine what will happen if they really have to raise it up to 5% to bring down interest rate inflation. But that's on the context that inflation really goes down. But if inflation actually continues to stay around there, we have a problem. Why? Let me explain this to you. Okay. Now, this is something that what people celebrated recently. The inflation went all the way up, right? Then at the high of 9.1%, it peaked, right, and then came down. Now, mathematically, it has peaked. Okay, but there's a concern here. If the interest rate keep on increasing, but the inflation doesn't come down, now it may be sideways for months and months at 8%. Then what is going to happen? There's going to be a very big problem here. Let me explain this to you. Listen attentively, okay? Now, first of all, imagine this, okay? You have paid for a business, a loan for a business, okay? And you do it together with everybody and the business is doing well. Okay, fine. You pay, first example, 6% interest, okay? So now what happened? Because globally now everybody is not making much money and global business is coming down. So your business itself is affected and it's down by 10%, 10%, yeah? And then Federal Reserve realized that, okay, there's a problem here. Let's reduce the interest rate by 1%. Now, I'm talking just percentage numbers, okay? So the interest rate from 6% down to 5%. Now, it's quite a bit of saving here, but it's still at 5%. But your business is down by 10%. So now what happened? Not only you are doing this business, everyone around you are doing the same business, and everybody is affected by this right now. So even though the interest rate is coming down, but the earnings are also coming down, then what will happen? Now, everybody will start to undercut each other. So maybe for this particular item, you sell for $10 for a profit of $5, but now because of competitors and people undercutting, right, you have to sell your thing from $10 to $8 right now. And so what happened? Your profit margin reduced by $2 or equivalent to $3 profit. So your profit earnings will be affected. And then what happened? Everybody, monkey see, monkey do, right? Everybody panicked. Now, initially, everybody was enjoying $5 or more profit. But now, because everybody's undercutting at the same time, so people will panic and say, you know what? I got so many goods at hand now, inventories. So what should I do? Now, back in pandemic time itself, a lot of people bought in a lot of stocks in case the pandemic continue, right? So what happened? The inventories is very, very heavy, and that's what this Michael Burry say about the potential bullwhip effect. And so now we have a problem, guys. So now if let's say everybody undercuts from $7 to $6.50, so which means that they slash the price earnings from $10 profit down to only $6.50. So everybody only make $1.50, and though that means the profit margin has came down by 35% or more. But then again, this is causing panic, right? So again, the Federal Reserve come and meet again and say, you know what? Let's just reduce it to 4%. So again, it looks like you save some money. But do you know what happened? It will cause panic. Because when interest rate comes down at a very fast speed, people panic. And when people panic itself, they'll drive prices down. So that is what Federal Reserve is trying to do. And that's why Federal Reserve say there will be pain coming in. There will be pain coming in. This pain will come in and hit businesses and hit some of the investors. And that is what I'm trying to explain. So then he says this higher interest rate will likely be persisting for a while. Oh, this is a very strong statement. So whatever 2023, there will be an interest rate cut, right? It's no longer valid. And the thing is this, it shows that, right, the inflation may have peaked, but there's no sign of decline. That's what I'm trying to say. This is what I meant. The market is sideways in terms of inflation now. With all these things at the same time right now, so what's going to happen next? Think about this. So businesses will start to go down. If businesses have to sell at $5 at cost, then what will happen to their business model? That means that they will cut a lot of jobs. They will cut jobs. And then after that, they couldn't facilitate and pay the banks. And because the interest is coming down, the banks will not lend out more money. They'll keep the money to themselves, and it will have a direct spiral effect. And then when all these things happen, businesses will collapse, and more people out of job, and that is why inflation will come down. Now, I shared with you last week regarding about this. I said before, the one thing about inflation is to bring it down totally is to make people jobless. You understand? To make people jobless itself is one way to curb inflation. I know it sounds terrible, it's scary, it doesn't make any sense, but that's how Economic 101 actually behaves. All right, so if you understand what I just said regarding this, is all right, can you key the word understood? If you understand what I just said, of last 5 minutes. Can you keyword understood? Thank you once again, Kifi, Leslie, Cheng Kui. Thank you for giving me the spot on. Okay. Wow, we have 75 people online right now. That's pretty cool. Now, I already said before, 2 weeks ago, when the MAO numbers was coming downwards, right, in the morning, it's because everybody is getting a bit complacent. They believe that they can do better on their own. So therefore, usually they won't watch any of such financial channel. But I remember telling you this also, that when the number increases itself, right, that actually speaks volume of what is happening right now. And that is why I say this MAO itself, right, has valid value. So if we put it on YouTube, it'll be much clearer to see the numbers of views. All right. Okay. So for those who will understand this keyword understood, that will be excellent. If you kind of lost yourself, right, you can speak to your Economic 101 teacher and see whether he can do a better job than me, or not the self, right, you can read a bit here and there and see whether the boys can explain it better than me. Okay, all right, I'm just trying to show you what I feel will be happening soon. Okay. Now, with that understanding itself, right, we can see very clearly that the fear and greed index is very interesting today. Now, I actually updated and refreshed this thing several times, and I realized that it's updated based on 20th of August yesterday. It's a Sunday. The fear and greed index is still at 44. That means that, right, the previous was 44, and now it's still 44. So we're talking about the market down by 1,000 points, and yet the fear and greed index is staying at 44. So that means that the market itself is not really that scared at this point right now. So even 1,000 points, it doesn't really scare the market. So I just wondering itself, right, how much more would that scare the market? Or contrary, maybe the market is so priced in that the next rally itself is going to break the high. I don't know. All right, so that it's going to be two sides camp, because the fear and greed index just didn't move at all. Very surprising, it did not move at all. All right, so that is something that I really not seen this, because you see this is a flat ground here. The last time we see a flat ground was somewhere here. Okay, and then let me see any more flat ground here. I don't think so now, friends. Yeah, I think that's the most I can see. The nearest one is something, but it still went out a little bit. So this is a complete flat ground. So this is actually quite scary. You know, it's like telling me either going to see this or going to see this. Okay. So I don't see a 25 or a 75. Okay, this is going to be crazy. Now, if we go to 75, we're talking about all the way back itself to when? That will be back to 2022 at the 2021 during the November period. November period in 2021. I cannot remember what happened. Let's just bring the chart in and let's take a look. What happened on the 2021 November period? I really cannot remember. So I'm going to bring it back you into time. Okay, let's bring it in. Back with the charts right now. A moment. Okay. Let me just remove this gold away. And we bring the chart bigger. Okay, let's see. November last year, 2021. Okay, here we go. Oh, okay. So at the time, the S&P 500 was trading at 47.31. And then it went all the way down to 44.86. Then after that, it went up again, but that was December, so not counted. Yeah. So that was a fear factor whereby it was 47.45, all the way dropped to 44.75. So it means it's down by almost 300 points. So where are we now, right? We are 42.008 down to 40.50. So we're down by 150 points. So if let's say we go down the same magnitude, right, the market must drop another 150 points or another 1,000 points. What do you think? You think that the Dow Jones go up by another 1,000 points? Okay, so I'm not too sure what will happen, but at least I know that we are all watching it very, very closely right now. Okay, got the idea? Okay, cool. Okay, so in terms of economic data, all right, let's just claw back what happened on last Friday. Now, we all know that the PCE data is something that the Federal Reserve actually used it, all right? It was at 0.6, and of course, on the forecast, they're looking at 0.3, but incredible, the number of 0.1. Oh my God. So that means that the PCE data, okay, has went down so much on Friday that it should be very, very bullish. But instead, the market went down all the way. Now, because why? It's something like this. The market, when the market goes up, right, they'll focus on this inflation thingy. But when the market goes down, right, they'll focus on the growth. So because the PC data is coming down, the market is saying that, oh, maybe the growth is going down, and that's why the PC data is going down. Oh my God. So you see, you just said whatever the Wall Street want to do. If they want to buy, they tell you something here. They want to sell, there's something here. So the best thing in the world is just follow the chart. Rather than you try to forecast the market, predict the market, and see how high or how low it will go, why don't you just follow the boys? So that's the reason why, to me, that trade with the boys makes more sense than trying to manipulate or trying to actually control or forecast the market. I think that's going to be difficult. Okay, now this week itself, today got nothing much, but tomorrow with the consumer confidence, right? The number is expecting to be higher, fair enough. Now we are going to look at very incredible, the ADP number. The ADP number is for the private sector and is expected to be higher than the last time. Okay, the last time there was a sudden drop in ADP numbers. This time now, you're going to expect higher. Now, the initial jobless claim we are seeing from the market consensus, they're looking at a higher number. Okay, there's a problem here. And that's what the Federal Reserve will want, because it will tell you that because more people get jobless, inflation will naturally come down, which I agree, okay, which I really agree. Because when you have lesser money to spend, you spend lesser, and that's when we spend lesser, the demand and supply will not be available, and hence, therefore, the merchants have to go down in prices, and that's where we get to get a lower price, and that's where the inflation will drop slowly, okay? And of course, on Friday, we have a very incredible thingy. We all know that last month we have the non-farm payroll cracking above 500,000 jobs. And we all know that the numbers itself was not going to sustain because we already see that happening. Now this time around, incredible, they're giving a much more, what they call more fair number this time around. We at 285,000. So it's going to be a drop right here. But of course, they already tell you in advance. So the thing is this, if the non-farm payroll figures itself, right, is any higher, the market may not like it. But if it goes too low, right, the market will freak out. So again, no matter what it's up, right, next week, this coming week, the ADP numbers and the non-farm payroll is going to be a cracker, okay? And of course, the unemployment data at the moment now is still standing at 3.5%. It's kind of interesting. Why? Because this 3.5% has been standing here for a long, long while, but the economy is not doing well. So somehow or rather, not too sure what's happening, but this is something that we had to watch. Very incredible numbers. Okay. All right, so Jerome Powell comments has fueled a 1,000 points market rout, okay, as stock slides for the second week in a row. Because the thing is this, the central banks will not hold back off the fight against rapid inflation. And we all know that Jerome Powell needs to help his boss now. His boss is obviously Biden, to basically get his second term. And in order to do that, the inflation has to be down. So now we're in August month, we have very limited time. We have to do what we need to do to make sure that we have a period of low inflation. So of course, now we can see that the Jerome Powell reiterated a tough stance against inflation, spurring investors to weigh the implication of higher interest rate kept in place for a long time. So in short, it's all right. The funds are telling the investors, you know what, either you move on, ship out, or you stay on, okay? So of course, some people say, I believe in the Federal Reserve. We believe that the rate cut will be good and believe that this will help later on. So whether believe or not, right, I think more important is to safeguard your portfolio right now. If the market is coming down, it's no way and no point to hang on it itself, right? Don't you think so? Okay, but again, this is your choice. You make your own decision, yeah? Okay, there we go. All right, so let's look into some global news right now, and then we'll see what's going on. Okay, where's my news? Here we go. Okay, so Jerome Powell already said that he's going to warn, and he warned that there's some more pain coming up ahead of the central bank fight with inflation. So it's just a matter of time this is going to hit everybody, and that's earlier already explained to you the problem here. So if the energy prices continue to recover back above the $100 per barrel, right, that means that they are not able to win this inflation. Hence, therefore, it's a matter of time they will increase more interest rate on the whole market, and that will pressure the dollar higher, and also we have a problem Now, ECB is going to have their earnings, it's going to have their decision on their interest rate. And of course, now the problem is that Euro itself is under severe heavy pressure under US dollar. And because of that itself, right, then we have a problem, because if Europe is going to keep on increasing interest rate just to be on par with the US dollar, that will also create a lot of problem for their own economy. And of course, the stock market will be affected. So that's why in history itself, right, we also notice that whenever there's a potential recession, the Federal Reserve itself, right, usually don't cut interest rates so early. So that's all telling you that, right, who knows, this Jerome Powell may have to do a Volcker-like thingy, all right? Volcker, as we know, in 1980s, he actually did it, and then that created the mayhem in the stock market. But after a while later, the stock market have their 15 years rally, and I think that's where Jerome Powell is heading on. Now, of course, on the side note itself, there's a rare tomato flu. Oh my God, I don't know there's a tomato flu, because tomato flu actually is due to a painful red blister. And it's actually now detected over 100 children across 3 states since the first case in May the 6th. So again, this again is showing that, right, this medical problem keep on happening. It's very, very, very scary. And of course, we really don't want this to happen in the world. But again, if we need to travel, this is where the disease will actually spread. Now, of course, in the postal workers' latest strike in UK, showing that around the situation now and the sentiment in UK is terrible, and of course people are not happy, and because now inflation is up, earnings is down, that's it, people will not be happy, and that will create more problem. And of course now we can see that Ford hiked price of electric Mustang Mach-E by as much as $8,475 due to significant battery cost increases. Oh my God, at additional $8,000 is no joke, man. So again, with all these things now increasing, right, it's just a matter of time the rest will be hit. So that's the thing why I said there will be a global recession coming in very, very soon. And I already tell you guys that employment will be affected. I already said this very much early, beginning of the year, I already tell you that, and that's the reason why we want you to go very slow with your investment. Now, DOJ reviews that reenacted affidavit justifying Trump at the Mar-a-Lago raid. So we all know that they really doesn't want him to come back, yeah, seemingly. So apparently it's all right. This is really coming in. There's a lot of pressure on. And we all know that, right, the only person can defeat Biden now will be Donald Trump. But the way Donald Trump is going through now, all the legal thing and stuff, right, he's just going to be mentally very draining unless he really, really fight on and go for it itself. Okay, so that is what we have for the global news. Let's look at something much more interesting, and that is the the alternate market news. Okay, now alternate market news means that, right, these data and information is still available on the mainstream media, but the way I clarify, the way I talk about it itself is different, and that's the reason why I tell you this alternate market views. Okay, let's go. Now we can see on last Friday, the way the stock market came down was terrible. Every sector was down. Now this is a very big difference and comparing with the last time when everything was green. So when everything was green, so I told you guys to be very, very careful. There will be profit taking coming soon, right? And indeed, it all happened. So now if everything is red, are you telling me the market will rebound soon? I would say yes, there will be a rebound soon on mathematics. But then again, this is not going to stop the market from coming down eventually, all right? So we can see what happened during the Jerome Powell speaking during that time. Okay, Jerome Powell came in and the market reacted by coming down initially. Okay, you see that? Then after that, right, Jerome Powell started to take stock to talk, right, and everybody was expecting the PTP, the plunge protection teams, to be around, or PPT, sorry. We expect the funds to be buying, but the thing is none of the funds were around. And then what happened when the Jerome Powell started to speak only, right, and talk about the inflation concern and third party thingy, oh my God, you can see the market really came down. But that was only after when he had finished talking. After he finished talking, the market still continued to go lower. Then after that, right, oh my God, this is how it ended, all the way to the end. So you can see that, right, okay, it's not just only Jerome Powell that did it, but there could be any extra more stuff. And of course, when we look at it, it's more of a profit taking than not, yeah? Okay, so you can see right now, right, Bank of America is saying that the investors itself are getting out of the stock market and bond market and going to buy into, they're getting out and they're going to buy anything. Now the pubs in this UK is having a problem because they couldn't afford the energy prices, and also we also know that a lot of people are very sad staying at home right now because they also notice that it's very hard to get jobs. So all this information tells you that the world global economy is not doing that well. And of course, we do see something incredible happen recently, whereby some of the China stock was being pushed up, right? Now, why was that happening? Because China and US signed a deal to avert a mass stock delisting. And because of that, right, it may actually save the current situation. But that was what is all we heard 2 days ago. But again, things can really change and we might not be able to do this. And you can see over there, it's all right. You can see the news was kind of like leaked out because you can see for Alibaba share itself, right, it was all the way coming down. I think no one in the right mind will be buying this counter. Then after that, there's a huge volume pickup over the last few days. And of course, on Friday morning, it gapped up itself and a lot of people start to dump on it. So that's why you can see the volume was high. But the question is this, why would they do that if they're going to buy and stay? So that's why a lot of things is spiraling now and says that who knows that this is a pump and dump exercise and people are getting hit. And I cannot deny that this is actually in my mind too, if this actually really happened. Okay, all right, so got the idea now and why this China stock itself, right, were doing so well the last few days, because this is the reason. Okay, all right, let's continue. Now I'm going to bring you back to 2008 again. In 2008, we all know that Lehman crisis actually hit the whole world and everybody got in a panic mode. And of course, because of that, that's all right. Many traders lost their job. Many traders got into bankruptcy. Some people actually really literally took their life. Okay, now, of course, we don't like such thing to happen, but it seems that somehow someone or some entity is trying to repeat this once again. All right. So remember, back then it's all right. There were many bailout coming in and were rejected, market plunge. And then after that, we all hit the new low. Remember? So this time around, it's all right. If we're going to have any form of this planned rejection, right, we will see the market plunging too. All right, we will actually see that. So the thing is this, let's just take a quick look on what happened in 2008 and what's the penalty or the collateral damage that we went through. So we all know that the housing prices went up by 31%. $30 billion was guaranteed for deals between Barristan and JP Morgan. Now, the Treasury government had to spend $350 billion from buying on the car and the banks. All right, remember, that was where the money went. And about $140 billion moved from the money market to the Treasury bonds because the bond price was not really the best deal, but still got money goes there. And of course, unemployment shoot up to 9%. Now, remember, now it's doing at 3.3%. Imagine if unemployment hit to 9%, 3 times. Oh my God. Now, of course, Freddie Mae and Freddie Mac, they try to guarantee their mortgage with 90%. And of course, Federal Reserve bailout for AIG is $150 billion. And you can see right now, right, the thing is this, by 2010, you know, the banks have to pay more. Okay, so what I'm trying to say right now is this. If now the Federal Reserve needs some money itself, right, they'll likely tell you all these things and try to increase the interest rate so that people can start to save and all this money can be utilized again. So this is how it goes back in 2008. Now, let's just take a look at this right now. This is from a YouTuber. She shared, I'll take from her. Now, take a note as I want to explain to you if what she shared. She said that in 2008 March period, that was where the market actually found what they call people is expecting that that things will be better. And then in 2008 in June period, things got really better. But then of course we also know that internally there's some problem. And then in 2007 it went down a little bit, and then in 2008 it really isn't this something very familiar recently? Yes, indeed. It looks like exactly what's happening recently in the market, right? So if the market once has done that itself in August 15, that was where the market collapsed. Oh, okay. Then we have it on the August the 27th or 26th. Right. That means there's some relation in timing too. All right. So I asked the person there itself. They tell me that this is not just so-called coincidence, but nonetheless, I'm saying that this is actually very scary. So let me explain to you on this thing here. So this might get a bit dry, but trying to explain this, if you understand, it'll be good. Now, the one in orange itself is the Fed fund rates, okay? That means the Fed interest rate. The one in candlestick is actually the stock market or the S&P 500. Now, you can see that when the interest rate, okay, now the thing is this, everybody thinks that if the interest rate goes down, right, the market will recover. You're very, very wrong. Now, you can see from the future and the past, okay, that this is something here. When the market was surging up in the Fed fund rate, right, you notice that the stock market is also going higher. But once the market hits a high, where the interest rate actually becomes flat or turned down, that was where the market really sells. So that means that a lower interest rate doesn't really help the economy immediately. It will help, but later. So you see that when the interest rate is kind of low right now, right, you can see that we can see the stock market recovering. Then, of course, when things are better, they raise interest rate, but the market don't really bother until when it starts to come down, right? And that's where all the problems start to come again. Okay, got it. So now the recent time is that the interest rate has been down for so long. That's why it's very easy for the market to push it up all the way for you, right? Okay, so now the problem is this. Look at it here, everybody. The interest rate actually hit a peak, right? And we have the market at the peak. And then when the interest rate goes so-called flat, right, we have the market actually coming down. Okay, so what I'm trying to explain is this, guys, that the market reacts pretty closely with the Fed fund rate. And of course, at the moment right now, we have a problem. The Fed fund rate is still going to go up. And then what should happen to this S&P 500? Now, by right itself, if based on history, if the Fed fund rate continue to go higher, the S&P must go higher. But what if, let's say, it can't? Then of course the selling will be great. So that's why to be very, very careful and see how it goes from there. Okay, cool. All right, everybody can understand this. If you can understand this is all right, press number 1. If you can understand what I just say regarding about how this whole thing works between the S&P 500 and the Fed fund rate, press number 1 right now. Okay. All right. So while you guys are typing the number 1 itself, right, let me continue on this one here. Now, this is the highly used moving average, okay, called the MA 200, SMA actually. The simple moving average SMA 200. Now, this SMA 200 is used by a lot of traders. They use it for long-term positioning. Okay, so very, very simple. Let's just take from 2015 onwards. Every time when the market hits the moving average, right, you can see the market will do a very strong rebound over there. And usually, right, it's so good that it really lasts. Okay, now we have a problem. Above it itself is very good for buying. What if it's below? Then we have a problem. So what happened is that when it goes below, wow, look at it. The selling wave itself is ridiculous. And of course, this is not going to be nice. All right, it won't be nice at all. And of course, you look at the magnitude of this whole thing. If you follow by the magnitude itself, right, you can see over here. We're talking about another potential, let me say, the distance here. That means another 6,000 point on the S&P 500. Wow. Another 6,000 point of the S&P 500. The current value of 4,000. 6,000 point, it'll be 3,450. Okay, so that means that this should be the target. Okay, all right, so that is what I'm trying to say in terms of the market may actually breaks the low and create even more problem later on. Okay, so this is the SMA. Okay, still not the end yet. There's a lot to go today. So with all this information put it together, we notice something very crazy really. Okay, so what happened is this. If you notice this in 2008, okay, the S&P 500 also tripped the moving average, and then after that, the market went all the way down and whoa. The thing was pretty cool, right? Okay, that also happened in 2008. But if you move and fast forward the tape, you will notice that it actually has the same thing in 2022, which is recently. In year 2022 itself, right, we also saw the market going up, and it's a reversal candle. And the thing is this, we can see very clearly the market doesn't care and the market keep on selling. Now there will be periodically a big rally like this, but of course then after that the market will recover with a stronger upside. You see, but if the market is due to fall, then of course all the technical level will drop, and this one technical level to watch. You can consider watching them. Okay. All right, so that is the chart for the S&P 500. But if we go deeper right now, this is where the thing gets very scary. Everyone take a look. This is actually what happened 5-6 days ago with S&P 500. Actually, the high of the day touched the MA 200 perfectly. No more, no less. It was an exact figure. And because it's an exact figure, is what I'm trying to tell me. That means that somehow someone actually make this chart happen. And of course, what happened after that, you can see now the market really, really come down. All right. So this is something that you must understand. Something in life that actually happened for a reason. So of course, the thing is this. Okay, let me just share with you. At this moment right now, right, how low would it go? Well, by right itself, right, this is the first target, this is the second target, and this is the target. Okay. So what we have over here itself, right, is about 4020. That's the first level. All right, then this one itself will be about 3900. And the last one here itself will be 3880. Okay. All right. So that's how I see this S&P 500 going down. If let's say it go down in this manner, but what is scary is this one here that repeated. Okay. So of course, we put them superimposed side by side, right? We have this chart that is ongoing right now, circulating around everybody's. All right, thinking that this could be a drastic drop coming soon. So if let's say this chart seemingly has merit, was it been correct and spot on. So by right September month, that's going to happen, right? It'll be very terrible, and the last low will be taken out. I think that makes a lot of sense. Now, of course, will the market eventually take on this low? Is all right. I really don't know, but of course, we do a comparison, and then we took the the chart of 2008 and 2009, and we compare with the current value, right? It does have a bit of interesting what we call correlation. So if that's the case, that means the next few days the market will be falling. Okay, so that's why I want you guys to take a look on this. So if you can, do me a favor, like and send me emoticons so that I can stay fresh with you guys. Okay, all right, cool. Thank you very much, guys, for all the emoticons. Appreciate that. Okay, let's continue. So now the thing is this, I suspect this will happen. Everybody put your charts on screen, I mean your thing and now. We have the market CCYR days ago. Say days ago, we already tell you that the market is doing a CCYR. And then of course, it came back down, break back below the resistance of the MA, but I mean of the BMB extension, but it's not what we want. Now the thing is this, the market just broke the support level here, and then in a single fitting, it went down to touch the support level. So it broke the resistance level, and now it will come back down to test the support level. And by the closing of this support level, it's not a coincidence. That means that there is a chance that we may see the market going down all the way to 31,872, because that is the point whereby based on the extension itself, we could actually see this. Okay. All right, and what number is that? As you can see on the screen right now, the number is 31,872. Now, how many of you think that we can see this number? Do you think that we can see this number, 31,872? If you think it will hit, put the word "it will hit." All right, 31,872. If you say no, just key the word "no," no, and that'll be the fastest way to answer this question. If you think the market will hit 31,872, please key the word it will hit 31,872. If you say no way this time round, no way, just put an "no," no. Simple, easy, and pretty consistent. Okay. All right. Wow, Chong Ming say will hit and use capital letter. Wow. Okay. Okay. All right. Judy also say that it will hit. Oh, okay. You guys are pretty bearish, yeah. This Jerry Lim also says that. Okay, wow. Okay, Dennis also say that. Brian say will hit. Susan, Leslie, Joe, or say all of you say will hit. Louis also think will hit. Brian also. Wow, you guys are very very bearish. Yeah. Okay, thank you guys for contributing. It's all right. If you ask me, if you of course in my own favor, it's all right. I think it will hit because I'm biased. Okay, I'm biased towards this. So I've been pretty biased recently, and I said that the market is going to come down. And of course, many people think that I'm just the guy who cried wolf. And I said that okay, it doesn't matter. Now, what is very scary is this: my KSI has turned red from green to red. And my KRW from nothing to red, go to red at the same time usually means the market will drop minimally by 1 KTR. So how much 1 KTR is about 80, 90 points, but we do expect it to be more than that itself. Okay. The ultimate support here itself is drawn. So we'll see whether the market can stay on the support here. Okay. All right, now this is the my famous 5% chart, right? Now, not many people talk about this 5%. Let me explain to you how does it work, and then you understand where it's coming from. Okay, so follow me, guys. So we have the all-time high created back in this January, whereby that's the reason it's 36,953. That's the all-time high. So of course the 5% mark is here at the 95%, and you can see it breaks further at the 90%, right? And 90% cannot break, it return back to 90%. If 90% doesn't want them itself, it come back down to 90%. So you notice that every time it move around the numbers. Okay, so what happened now? Obviously, if the market breaks below the 90%, what happened? So the 85% that will explain certain thing. And then if this continue, right, then we have a problem, because the last time we see this, the market actually came down, touches the channel, and then rebounded, touching the channel, again rebounded. So the thing is that we thought that the market will go down all the way to the 80% mark at 29,563. But the problem is that it missed it by a hairline, and the market recovered all the way. And of course, once it crossed the 85%, the next target was 90%. Now, I want everybody to do me a favor, take out a calculator. You should know that a calculator. You will know that if we take this number here right now, everybody, we take 35,105. And this number here, 33,258. Okay, you take these two numbers right now. Take 35,105 plus 33,258, then divide by 2. What number do you get? I repeat, 35,105 plus 33,258. Okay, and then divide by 2. What number do you get? So anyone? Okay, Joe Fu has got it. The number is 34,181, right? Okay, 31,181. Thanks, Joe. Thanks, Chongming. Thanks, Jerry. Okay, so now everybody look at the chart again. Okay, look at it again. Now I'm going to bring you the chart right now. Okay, I want to bring you the chart to you right now. You'll be freaking out. Trust me on this. Moment, yeah. Okay, I bring you the chart right now. Okay, take a look. Okay, take a look, everybody. Okay, you see right now? If you can, let me just make the screen a little bit more to the right side. Now, this one in yellow is actually 34,181. Can you see that? Can you see that? All right. So what we do is that we took this number 35,105 plus 33,258. We plus them together, then divide by 2. We get this number, right? 34,181. Oh my God! Look at it. This is so incredible. The market went all the way up, crossed the 85% mark, crossed all the way to the 90% mark. This time around, it did not go to 95, but it stopped exactly at the midpoint of the between them is in short 92.5. Okay, it stopped just perfectly there. And then when it stopped there itself, oh my God, the market really calmed down. And the scary part of this is that if you look at it right now, guys, look at it. We take the same way now. We take 31,411. 31,000. We take these two number now. We take these two number 31,411 plus 33,258. We take these two number, add together, divide by 2. You can try on your own right now. All right, and you get the middle point, and that is where the Dow actually closed on Friday. Oh my God. This is so scary. The numbers itself, really, the number itself is so scary. The number is 32,334. Okay, so you take the number 33258 plus 31411 divided by 2. Oh my God. Okay, so what is going to happen next? That means that if the market cannot go back up again, if it cannot go back up above 32,334, the next number is going to go down, will be this number, and that's 31,411. Can you understand right now? So that means that if the market stays below 32,000 for sure, then the thing is this, the market is going to go down to 31,411. But if the market can cross 32,334, who knows, the market may recover the whole 1,000 point. All these are all mathematically possible. So we're going to basically look at the market very, very closely. And of course, if this really happens, this is going to be a real incredible moment. Yeah. So traders, now you can see why, why am I want to spend more time to educate traders, become full-time traders, and lesser training in a way. And then of course, on a side note itself, right, I want you guys to practice all sorts of incredible data. Okay. So all these numbers, please take note, because that will be very effective. Okay. Take note of that. Yeah. Okay, so that's the reason why, that's why I say that there's a good chance the market could be going down to this 31,411, okay? And the downward channel shows that it could actually goes down further than below the 29,563 level, okay? So take note of that. Thank you, Susan, for updating us with the silver and gold price. And I already tell you guys, silver and gold will be coming down. I already tell you guys, and it's already happening. So watch out, there should be more selling to come. So this is where I was sharing with my friends about how I see 2018 pattern now. In 2018, let's just go it slowly, everybody. In 2018, the peak here itself, remember the peak was back in 2018, and then when it peaked, the market came down, right? Okay, so when it came down, and then it went sideways for a couple of months, and then after that, it went up again, and incredibly, it stopped there, and the market pulls back. Can you see that now? That means that the 2018 peak is a very, very powerful peak. Okay, fair enough. Then what happened? The market went up again, hit the 2018 peak, and then came back down again, tries again, down again, tries again, down again. But this time now, we notice that the lows are getting higher, right? That's a very good sign. And once the market blasted, we went all the way up to south to 2020 peak. Okay. And of course, after that, we all know that the pandemic hit us and the market then went down all the way. Okay, that respect the pandemic time. So now we have a new evolution here itself. Let's take a look, everybody. The market now recover all the way. And again, we have all the resistance around this area and support here. And once you break the 2020 peak, it went all the way up. Okay, so it's not so bad, right? I mean, it's like, okay, it's just some support and resistance, but there's something I need to tell you right now, guys. The thing is this, since the high in January 2022, right, there's a very strong thing that changes around the angle, and the market may be now involved in a bigger problem. So what's happening is that even though it looks okay, but then obviously itself, right, in terms of the people getting hit itself, it's not so nice. So what is going to happen? Do you think that it's going to rebound all the way, or going to see 26,878? Now, why is that so? 26,878 is only here. That's where that means that we're talking about even lower than 29,563. Okay, I'm talking about if the market really goes down, the market can really come down all the way to 26,878. Okay, so this is a very colorful chart. I hope you understand where I'm coming from. More important is that, do you understand why I think the market this time around could be going worse than just only 29,563? I think this time around we can actually see more, down to 26,878 level. Okay. All right. right, so with that, that will end all my interesting sharing for today. Let's look at the charts right now so that we can know what to do in the market. Yep. Okay, let's go. Now, China A50, as you can see, despite the unification deal that they're trying to curb lesser, to ensure lesser people delist them on the market, right? But you can see that the market did not really react accordingly, and now it's actually trading lower. So now you can see it's very clear that the moving average at MA30 is a very strong resistance right now. As long as the market doesn't cross MA30 effectively, the market could be going down further. And I told you before, the number is below 13,000. Okay, I strongly believe that this will actually be happening soon. So because, sometimes in life, we just do not control and things can get very bad. Yep. Okay, let's look at the Dow Jones right now, the day chart for the Dow Jones quickly. Let me do it for you. Okay, the Dow Jones day chart, we can see now very, very, very clear. They have a new BMB right now from yesterday on Friday. So the BMB target is 31,034. Now this number is slightly lower than this MLP, right? So which means that if the market is going to go down towards MLP, right, then of course we can look at it to go down all the way together to 31,034. Okay, that is something to watch out for the Dow Jones. Now the Dow Jones is below MA30, below MA200, below MLP, right? So no matter how below OP, the market will likely have to come down. Okay, of course, the first target I assume for now is here, 31,807, because that is where it was really born. Okay, over here is up, and that is a very strong support that the market is trying to avoid. It came from this guy here. Anything lower than that, we can see the market going to go down further, but this time we wait for a while to talk about it, okay? All right, so that is the Dow Jones for today. It's below P2, definitely below OP, below P2 is a sell, below OP, below P2 is a sell. All right, now I think there's something that we take note, yeah? Okay, NASDAQ is a CCYR new, or you can hear this is a single yellow. Now, single yellow means that the market is more likely to see some selling. And the market now, if we're going to go downwards to sell, right, the first obstacle will be 12,178, which is no problem on that. Then we can come to the full target level. The full target level is 11,952. Okay, got it. So with the KSI rate in color, all right, and the market is below P2, all right, and it's in a BMB right now, there's a very good chance that we can see 12,178. To see 11,952, I think that will need more than that itself, okay? We'll let you know as the time goes on. S&P 500, as you can see on the screen right now, it's also something like the Dow Jones. We'll tell you and warn you that the color has changed from yellow to red. Okay, and then of course we'll tell you that if the market is not too dry, then you can buy the lead. Okay, under control. Right. So the S&P 500 now 40.18 is a very strong, resistance there. If the market can go below 40.18, then the market can go all the way down to 39.33 level. Okay, so watch out for that 39.33 level. Okay, the best number is this, is the S&P 500 extension. Is very beautiful, 3888. Oh my goodness, this is a beautiful number, S&P 500. Yes, Sun Pa Pa Pa, 3888, prosperity 3 times. Oh my God, 3888. And again, it's right. No one in the world will take a number like this unless it's for the, for reason for presentation. All these numbers that I'm showing right now is all computed by the software, and the software calculates to you. So okay, this is the ground potential. You go, then just go for it. So it's quite incredible, right? It's like predicting the next potential movement itself. Now this is Nikkei. Nikkei is coming down fast. Nikkei is not going to enjoy this because Nikkei, if the dollar is strengthening, the yen, although it's good, but then that will affect their overall cost. Now it's below MLP, below MA30 is coming down, and of course here itself, right? And of course south right is about this 27,730. Okay, So which means that if the market continue to fall, there's a very good chance that the market may trip the extension. So the extension is there at 27,730. So now we are only 50 points away from it. So right. So most likely the market will be able to go there. Okay. All right. That's my view here itself. Okay. Nikkei. Now Hang Seng. Now Hang Seng was spiraling upwards strongly upon the news on no hurricane, and it almost reached the PMB. The BMB was 20,689. So we thought that the profit is locked in, and every time we see the market, all right, we can see the market miss it by a fraction and then pull back quite drastically. All right, DJDD. All right. So now the thing is this: if the market really continue to go down further, then the thing is to catch on the downside, and that will be 19,438. Okay, so which means that if the Nasdaq breaks below MA30, which is 19955, if it breaks below it, then the market can easily come down to 19438. Okay, and understand? Okay, all right. So that is what we have for the thing here. Now the DAX will be coming out later. But I already told you DAX will plunge on Friday, and I give you a number. I say DAX will come down to 12,853. Do you remember? And oh my goodness, look at it. This is what we all know, right? Below OP, below P2, we look to sell, right? Then, of course, the thing is this: below MA30, below MLP, we look to sell. And there's a chocolate bar, right? This chocolate bar itself is so big, so the market will eat back the chocolate bar, right? The KCB, remember the Cal chocolate bar? And oh my God, look the way it closes. This is fantastic. All right. So again, what does it tell you in volume? That our TA itself is that incredible. Only to draw anything, we just have to follow the chart and make money from the market. The market can never beat us because we are here to follow them. We can't beat the market because we need them to basically allow us to have a flow. So whatever it is, the next thing I believe that the DAX will rebound a little bit and then drop it again, and then this time around will be 12,500. Okay, all right. So that is the DAX level. Let's see whether DAX can really go down to that level later on. Okay, let's look at the oil market now for time being. Oil is moving up slow and steadily. Now, despite the US dollar is going up, right, but the oil is going up rather steadily. So if the shoot up past the resistance of $95.60, then okay, we're going to see a strong rejection at 99. Okay. Now the KSI is all the way green recently, although it's turn red, but still not really the official coloration yet. But the thing is this, it's kind of clear that right, the crude oil is moving upwards recently, despite what happened. So when the market is going down, we are going up. Okay, so that's the thing here regarding about oil. We can go much higher to $7. Now it's $93. So let's press the button. We need to do that. Yep. Okay, last 12 to go before we enter this MAO. We have gold price right now. Gold price is still coming down, right? I already told you guys that gold price will likely be coming down further. Okay, what's the rationale reason? Now, the reason is pretty simple. I already mentioned to you that as long as the market is below MA30, below MLP, right, and KSI is red in color, we will have some selling. And truth be told, the market really opens and trade lower, and now it's very near to pivot 2. That means that there is a chance that there's more funds coming in, and that's the reason why the dollar is interest rates continue to go higher, and that pressure the dollar to higher, and that bring down the the gold price as well. So when the US dollar goes up itself, right, that means that the regional asset price will be affected. Okay. All right. So while low will it go? While 1718 will be the first target, and of course, if you can go down further and break below P2, then who knows? We see all the way down to 1847. Okay, all the way down will be 1695. Sorry about that. Okay. All right. So gold cannot buy it now. Please wait for a while. Let the market dive down a little bit more. Then you enter the market. Okay. Stay tuned. Stay focused. Don't jump into the market. Okay. Now, how about silver? Silver, the same thing. I already told you that silver will pull back. So silver, if it goes down below MA30 and MLP right now, you can see it's below P2 at the same time. Classic trade, sell. I already tell you guys, classic trade is whether it's buyer or seller, just follow. You will make money. Below OP, below P2, you sell. Above OP, above P1, you buy. And now it's below OP, below P2, so you sell. Now, how low can this go? Well, you can see that it may go all the way down to this point here, sell to $18. Okay. So wait for a bit more, let the price come back, and then around this area here, you can buy into it. Okay, last two before we go, and then on top of VIX very fast. Now, I tell you guys that don't buy Ethereum, don't buy this Bitcoin. I tell you guys that Ethereum will come down to 1411. I already tell you guys, remember? Now, the KSI is green in color, blue bars are extending all the way down. That means the market is very, very bearish right now. And to this, a DJDD for Ethereum. It's a higher chance for Ethereum to hit 1411. So be very, very careful that this market may hit. And of course, once it hits itself, right, I'm done with my job. So we will discuss about this later. All right. Okay, so that's Ethereum, and last one is Bitcoin. Now Bitcoin is also trying to come off, recover a bit from the low end. The low itself was 19,500. Now it's back a bit. Okay, so very simple. You are DJDD, and you have the market here itself, right? So if you want to expect the Bitcoin to fall further, it may come down all the way to 19,190. Okay, that means that if the Bitcoin is to fall, it must break. It will stay below MLP. Then after break this KCB at 1965.1. Once you broke that, the next level will be here. Okay. All right, got it. So that is for Bitcoin. Okay, so Bitcoin, Ethereum, I already tell you. Now last one is the VIX. Okay, 1 minute. I bring you VIX and we'll round off for today. Okay, now because a lot of people have been asking me about VIX, and I tell them to watch out for VIX. Okay, so why about VIX? Okay. So VIX itself, right, is a more of a what they call a comparison to what they call hedge against the market. And I can show you the chart which I draw and leave it there for the longest of time. You can see that I told you guys that no worry on the VIX. If you ever come down to 20, it's a steal. Okay. Anytime you come down to 20, you die must buy. Now already at 25. Okay. So imagine that if you actually follow me and been buying at 20, now at 25 itself, we are already up by more than 20%, more than 20%. Okay, so how high can it go? Well, I already told you guys, if it's going to go higher, we can see about 34. Okay, so very simple. If you can, just inform us 34. If you cannot, then there's something that I should think about it. All right, so the market itself, right, why 34? Is this the reason here? Because there's a trend line. So 34 is kind of like uppercase of the whole thing already. So let's see whether you can see this happening, but I think 34 is good enough. Okay, it's good enough. All right, now last one is crude oil. The dollar. Now I told you the dollar index will hit 110, and it's really doing that. We have a very strong double bottom here at 105. I dropped for you already, and I told you guys that this will go higher. All right, I think that although there is this monkey box thingy ongoing, but I said that if the US market doesn't want to care, then whatever it is, it doesn't really matter. So basically, the market didn't care, and instead the market jumped in to buy, right? So what I did is I began to buy up also. Okay, all right, so the US dollar now is 109. So for 105 now is 109. That's up by about 4% upside. And will it go higher? Well, easily. This will go to 110 easily, because 110 is the kingpin here itself. So that's why I said that very good chance that we will see, you know. Okay, you can see this is the dollar. This is the dollar index. The dollar index is really at the high right now, and this is no joke. So if the dollar index continues to go higher, right, then what will happen? That means the interest rate is going to go higher, likely so, and because of that, the stock market will pull back more. All right. So with this, it's all right. I hope you guys have a good MAO today, and I wish you all the best. And I sincerely hope that you guys will support me further when you go to the YouTube channel. All right. With that, it's all. This is Cal signing off. Have a great day. Bye bye.